Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a fruitful Thursday so far. This is going to be a bit of a different one. We're going to be focusing on the S&P, the US stock market, really, and looking at the fact that, or I shouldn't say looking at the fact, looking at the likelihood that it is now on its next down leg. So we've been really calling for continuation in this bear market across the board. We think this has a lot to do with interest rates and a restrictive monetary policy. We know all markets essentially sold off in preempt of the interest rate rises, as hedge funds, big players will look to move capital around based on liquidity models and the fact that liquidity would now get redirected into a colossal debt market. But on Monday, we really covered and we brought up a tweet, I should say, but it is a tweet in many ways, from Chris Weston, who was essentially saying that Mike Wilson from Morgan Stanley was advising his clients to cut out of US tactical longs on the US equity market. He then goes on to quote, "We are now right into our original upside target, and we recommend taking profits before the bear returns in earnest." And he's called it extremely well thus far. We also looked on Monday at an article that essentially covered Mike Wilson's comments. I'm a big fan of Mike Wilson, actually, and I think he's got things pretty spot on, certainly this year. And of course, he's at Morgan Stanley, one of the bigger banks in the biggest sort of investment firms in the United States. And essentially, he was calling for a very turbulent ride in the S&P returning to levels of 3,000 to 3,300. We did look at this the other day, and we've maintained a very, and he sort of called this up here, so he's called it very well. This is a daily chart, remember, it's only been a couple of days since he called this, but he's calling for an S&P drop down to here. This makes sense with everything that we're looking at in our crypto space. So this, of course, is going to have connotations with the crypto market. You guys will know in my daily market updates, we're cross-market analyzers, which is what separates us from the herd and has actually kept us, from an investment point of view, very safe during this time. It's given us a kind of pillar, looking at the macroeconomics of things and looking at the sort of broader picture, has really given us a kind of compass to navigate the cryptocurrency markets, because the correlation is apparent. It's undeniable that, at the end of the day, the reason the correlation is there is because all markets are moved from fiat, money, dollar, whatever they're denominated in. Yes, there are pairs and whatever. But generally, things go up in a flourishing environment and they go down in a restrictive environment, which is, of course, what we're in. We're not going to talk about risk, because there's real risk in terms of what the yield curve's predicting and all that other stuff. But this is just going to be quite a technical one on the S&P specifically. And this is going to have connotations for the crypto space because it's going to follow it very likely. Now, we saw this rally that we had, and we'll talk about this sort of capping grind line or resistance line. This rally that we had was largely caused on dollar weakness. So you can see this, of course, is the dollar in orange, and you can see that things really started to turn as the dollar turned. These are very inversely correlated, of course, because you're looking at the S&P in dollars, you're looking at Bitcoin in dollars, so on and so forth. Very self-explanatory. We're also going to look at the VIX in this one. So this is going to be very technical. But we've been saying for a long time that this bear market is going to be a brutal one. We are in a recession, going into a deeper recession, if not potentially a depression, depending on how bad things get. I have some pretty horrific, looking at the yield curve, I have some pretty horrific predictions about, what I think may come. I think we're just looking for that moment where everything kind of goes tits up, for lack of a better, to use a very English phrase. So we know why we've had this rally. Bitcoin didn't appreciate because it had the FTX collapse sort of steal the show. Otherwise, it would have likely followed, and we would have seen Bitcoin maybe get back up to 25K. And instead, we actually fell from that grind line. We were short then, and we actually shorted the next one that we had and said, look, at 15,600, we're going to call it a day on the shorts. We're going to look to get longs. And now, we're still very much back on the short side of things. But we've always had a sort of a more pain to come trajectory. And the S&P potentially is showing us that this pain is now at our doorstep. Going into Christmas and going into a new, what is being predicted by most analysts, a brutal year ahead. So you can see you know, we've sort of expressed why this has started to sell off and why we're in this bear market, and it has everything to do with monetary policy. But you've kind of consistently had aggressive rallies. People think that you can just short a bear market and make money. Well, this chart is a perfect. Anybody that tells you it's easy to trade, if they've been doing it for 50 years and have made, you know, they're living off it and their money off it, then maybe they have the respects, the sort of credentials to tell you that. But in my experience, the people that are real traders, the last thing they will do is tell people that trading is easy, because the reality is that it isn't. And this is a perfect testimony of it. You know, this is a bear market, but if you had just gone short the whole way here, I mean, yeah, if you got in right at the top, but positioning anywhere down here, it's treacherous. And actually, Mike Wilson has been very good at calling this, and his comments on Monday are very relevant. Certainly his targets for the S&P are ones that I have in mind and have, you know, related these to our market, the crypto space. But every time thus far, we've been capped by this sort of descending resistance, we'll call it. And perfectly, just like clockwork, you sold off again here. And we are now looking like we're on this next leg line. Now, just because we had a rejection here doesn't mean you can't do something like this. And maybe you break this, right? Maybe there's a bit more of a rally. But given what Mike Wilson said, given the fact that, look, this from a shorting perspective, or from a getting out and taking positions here to the down to the outside, you also got a bit of a double top here as well. Makes a hell of a lot of sense. And actually, it's my opinion, now moving on to the VIX, that this is going to continue to fall. And I'm going to show you why. So let's just start with the VIX, the volatility index for the S&P. There is a correlation here. And in regard, and I'll come back to this chart, because where we actually are, typically you do get a slight bounce around this sort of 30 moving average for your daily. Doesn't have to be the case, but you have had some sort of a pullback here. So there is the potential for a little bit more of a rally. Maybe this is the Santa rally, and then we continue going down. But to bring things back onto the VIX, so we have the VIX. I'm going to change this and put this in a line format. So this is the oh, wow, that's confusing, isn't it? Let's actually change the VIX to a nice purple. So we've got the VIX. We'll take the S&P off again. This is essentially monitoring the volatility within the S&P and the sort of positioning, right? Now, the correlation here with the S&P, of course, is if we look at the high points for the VIX. That's not what I wanted. If we look at the high points for the VIX, remember, keep in mind that, okay, now we potentially start the next down leg. You can see that when the VIX is at a high, so the volatility is at a high, usually the S&P is at a low, right? So this is also the case here. It's the case here. VIX at a high point. Let's broaden this chart out. It looks very confusing, guys, but, you know, I kind of think like finance is made to be confusing. Otherwise, they couldn't keep everybody a slave. No, I'm joking. I'm not actually joking. But you know, that's completely off topic. Anyway, so VIX high point, S&P low point. Okay, and this is really since the start of the year. Just to broaden this out, and vice versa, when the VIX is at a low point, usually the S&P is at a high point. Okay, so if we look at what we've got taking place at the moment. And this, of course, was so when the VIX is at a high, stock market at a low. When the VIX is at a low point, so you can see down here. So let's get rid of what we put on so far and do the adverse. You can see that the stock market is at a high. Okay, so you can see quite accurately times the top, if you will, for the stock market. You can see this. Look at the VIX at these sort of low bottoms, if you will. It's not perfect, but generally, you know, it's pretty accurate. You can see where we currently are for the VIX, keeping it like this, because I think this makes it a little bit less complicated with them overlapped. This was the low point for the VIX, and it looks to be going higher, which is at high points you end up at your low points for the stock market. So this looks like it's on the journey up, which would suggest that the S&P is going to come down. Also correlating it with this, Mike Wilson's comments, and I don't think they're to be taken lightly at all. It suggests to me that the S&P is now on a trajectory downwards. And this may come at a time where the dollar reaffirms. So it's my opinion, talking about the dollar and bringing the dollar into this, because it is about as relevant as it could possibly be. Let's change that to green. My OCD is really just, killing me right now looking at that in orange, in a nice Bitcoin orange. But you can see the correlation here, guys. Certainly recently, you can see that as we've got a strengthening dollar, the stock market's gone down, and you can see that we've had this pullback for the dollar, and essentially, this has allowed. Look at the correlation here. Now, even though I think maybe you may get a bit of a weaker sort of dollar, this is a high point for the dollar, low point for the stock market. Even though you've got a sort of weaker dollar, it is likely to reaffirm, in my opinion. And I think the reason it reaffirms is because we're seeing open interest drop out. Where do these people go? They go into dollars. And that the dollar is likely going to continue to climb in a similar fashion to what it did in 2001. Bringing it back. So in 2001, you had this sort of harsh sell-off, and then it did this. I think you're looking at a similar thing for the dollar today. And if the dollar's going to go up, with the volatility now looking to make its way up, meaning that stock market's going to be inversely correlated and go down, and you're at this sort of real significant grind line, if the dollar does this now and starts to make it, I think it's going to be a little bit more surprising, and maybe, the lower CPI print kind of keeps it a little bit more stubbornly low, and it does something like this and sort of works its way up. Well, the S&P is probably going to, maybe we have a bounce on this 30 MA, but it's likely going to keep going lower. And then I think what's going to happen, this is just my scenario forecast, is the yield curve is going to come into effect, and whatever it's predicting is going to happen. This is going to cause a mass sell-off, and this is going to cause the S&P, essentially to do what it did in 2008, which is what we've been looking at. And these are Mike Wilson's targets here. Just putting them on very, very quickly. This is what he's looking at. So he's looking at this as a first one, and this is a potential one. This very much lines up with what we've been calling for all along. This is 2008, which is this kind of 2008 style recession. We'll see just how bad it gets. My suspicion is this recession is going to be a particularly harsh one. And the reasons being is going to be because of just how much debt there is in the system and over collateralization. So you can see you're still very much following this sort of schematic, if you will. Just because the schematics look similar doesn't mean it's going to play out. Whether you come all the way down here is it's not really what I'm focusing on right now, but certainly we are calling for lower lows for the stock market, for Bitcoin, for crypto, for everything, even for gold that's done exceptionally well recently. And this is going to be on the back end of a deflationary, recessionary environment. So inflation may come out a bit lower. We'll cover all that in my daily market update. So this was just some analysis on the stock market. Of course, you can look at the cryptocurrency space and compare these. But it looks very much set that we are now on that next leg low. So we actually exited shorts, took a bit of a loss on some of my shorts in the crypto space. Just because, and we've always said this from this sort of 44 down here when we sort of got out our shorts after calling for a short squeeze, which happened beautifully, that, yeah, we've climbed it and we've followed our sort of path so far, but it could have fallen short here. It could have fallen short here. Maybe it gets up to here. Maybe it gets up to here, but you're playing Russian roulette, guys, with some of these targets. And there is the potential, let's say we get a really low CPI print and everyone gets bullish again, that you do come all the way up here. But the eventuality is that you will see downside after this, in my opinion. Remember, this is crypto. You could get a move to this sort of magnitude over a matter of weeks, guys. And maybe the stock market holds out for a little bit longer. But it looks very much like the S&P is now on its next leg lower. All I've got for you in this one, guys. If you enjoyed the content, like, subscribe, appreciate it as a comment. And I look forward to seeing each and every one of you in the next YouTube video. Let me know your thoughts in the comment section. Also, I've got a Patreon for anybody who wants to check that out. See you in the next one, guys.